Welcome back to my channel. I'm so happy, I'm so delighted to welcome you once again to my channel. I still remain my humble self, Austin Ikeru, and you all are welcome to my channel, Ostino FS. So in today's video, we are going to be looking at a powerful indicator that will help you to make money in the forex market. So I will advise you all to watch this video from the beginning to the end, because you are going to learn a lot from this powerful indicator. So in today's video, we are going to be looking at the Keltner channel. Keltner channel is similar to Bollinger Bands. They work almost the same thing, but the difference is the calculation. Keltner channel makes use of average true range, while Bollinger Band make use of standard deviation. So this is what differentiates the Bollinger Band from the Keltner channel. So we are going to look at this powerful indicator, and I'm going to show you how you can trade it and how you can plot it on your live chart. So like I said in my previous video, I'm going to be giving you so many forex trading strategies. It is now left for you to backtest it and pick the one that actually works for you. So now the Keltner channel is an envelope indicator because it measures the upper and the lower range of a price. So it has the oversold and the overbought condition. So whenever price crosses the upper channel, it means that the price has entered into the overbought condition, and whenever the price crosses below the channel, it means the price has gone into the oversold condition. They will also have the mean. The mean is the line in the middle, and that is the 20 exponential moving average. So you are going to learn a lot from this indicator. You know how it works, where it works, and when to implement it. So the Keltner channel has three main components. There are three things you should look into whenever you are making use of the Keltner channel. Please, there are three things you should take into consideration. The first is the middle line, which serves as the mean, and that is the 20 exponential moving average, right? They will also have the upper line, right? The upper line has two average true range, while the lower band has two average true range. So what we are going to do right now is that we are going to dive into the example of this indicator, because my method of teaching, I don't only teach theoretical, I give you examples so that you can understand what I am talking about, so that we can flow together, right? So I will advise you to use the default setting of the Keltner channel, right? So the default setting is what I just listed for you. It has the 20 EMA, which serves as the middle line or mean. Then it has two average true range at the upper and two average true range at the lower. So this is the default setting of the Keltner channel. So let me give you an example of how this channel looks like. Now, if you watch clearly, this is how the Keltner channel looks like. Like I said previously, this channel, this indicator looks like a Bollinger Band, right? But the only difference between the Bollinger Band and the Keltner channel is the calculation. Like I said, the Bollinger Band use standard deviation, while the Keltner channel use average true range. Now, for you to be able to trade this indicator perfectly, you should understand market structure, and also you should understand price action, right? And like I told you, whenever I teach you indicators, I try to include price action so that you have a better confluence whenever you are trading using this indicator, because price action will make it to be more reliable. Now, if you are trading the Keltner channel. There are three things you should consider, which is the upper channel, the lower channel, and the middle band. So this line above here is the upper channel, which acts as overbought condition or overbought level. You can also use it as a resistance level. Then this lower channel, right, serve as the oversold condition, or you can also call it the support level. So whenever price touches this upper line or crosses above it, it means that the price has entered into an overbought condition and sellers are preparing to push it down. And also whenever price touches the lower band or crosses below the lower band, then you know that the price has entered oversold condition and the buyers will soon step in and push the price up. And whenever the price is above this middle line, it means the price is in an uptrend. You are only looking to buy. And when the price is below this middle line, it means the price is in downtrend and you are only meant to sell, right? So this Keltner channel works extremely well during a ranging market, but when the market is in a strong uptrend, you have to change your strategy. It's similar to Bollinger Band. Whenever the market is in a trend, a strong trend, you don't trade the way you trade during a ranging market. You have to change your strategy. So you are going to learn everything in this video. So now when the market is in a range, this upper channel acts as resistance level, right? And this lower channel acts like support level whenever the price is in a range, right? But if the price is in a trend like uptrend, right, the price will touch the upper band so many times. So when the price is in an uptrend and you are selling from the upper band, you are going to get hurt because your stop loss will be triggered so many times. And if the price is in a strong downtrend, and you can see that when the price is in a strong downtrend, it will be touching the lower band consistently. And if you decide to buy at the lower band when the price is in a strong downtrend, your stop loss is going to be triggered and you are going to lose a lot of money. So that is why I want you to learn how to trade this indicator very well so that you can use it to make money. So how do you trade using this indicator? Now, if the market structure tells us that the market is in a range, then we can now make use of the upper and the lower band as our signal. When the price moves to the upper band and crosses above it, we know that the price is in overbought condition, so we are meant to sell. So what you do is that when the price crosses above this upper band, you will now place a sell trade and put your stop loss above. And when the price got to the lower band and crosses below the lower band, you put your buy trade and then put your stop loss a little bit below, right? So this is how you trade using the Keltner channel. And also remember that you're going to include support and resistance level, because when you identify support and resistance level, and maybe let's say you saw a resistance level, right, and then price now got to that resistance level and crosses above this upper channel, it means that the price will definitely reverse and head down. The same thing is applicable to the lower band. If the price is in a range, right, the lower band will serve as a support level. So whenever the price crosses below the lower band and you saw the support level, then you cannot confirm to yourself that this is a support level and the price is willing to reverse from there. So this is how the Keltner channel works. Then during a trending market, when the market is seriously in a strong trend, either uptrend or downtrend, then what you are going to make use of is the middle line, which is the mean, the 20 EMA. So whenever the price is in a strong uptrend, where you are expected to place your buy trade is at the middle line. So whenever the price gets to the middle line, you place your buy trade, right? whenever the price gets to the middle line, you place your buy trade, because since the price is in a strong uptrend, it's going to be breaking different resistance level, right? So you don't want to short at resistance during an uptrend. You need to ride the trend. That is why it is always advisable to trade in the direction of the trend. Don't ever try to trade against the trend. So if you watch clearly now, you see that the price is in an uptrend, right? You can see the price is in an uptrend, especially here. From here to here, the price is in an uptrend. So that is why the price is touching the upper band consistently. So if you say, okay, since the Keltner channel acts as overbought and oversold condition, when the price gets to the upper band, I'll place my sell. If you do that during an uptrend, you are going to lose consistently. So like I said, during an uptrend, where you're supposed to place your trade is at the middle line. That is the mean, the 20 EMA. That is where you're supposed to place your buy trade, right? So, and whenever the price is in a strong uptrend, use the middle line as your support, because in a strong uptrend, the middle line acts as either support or resistance level. If the price is above the middle line, then we know that we are in a strong uptrend. And if the price is below the middle line, know that we are in a strong downtrend. So when the price is above the middle line, you are only looking to buy, and when the price is below the middle line, you are only looking to sell. So when the price is in uptrend, don't ever place sell trade at the upper channel, and when the price is in a downtrend, don't ever place buy trade at the lower channel. So where you're expected to place your trade is at the middle line, which now acts as support and resistance level during an uptrend. I hope you understand what I'm talking about. Let me give you another example so that you understand what I'm talking about. If you watch clearly, you will see that this is a strong uptrend, right? Before, the price was in a downtrend, and suddenly the price now changed direction and entered the uptrend. So if you watch clearly, you see that this price now, crosses the upper band, right? Now if you say you want to sell at this upper band, you are going to lose a lot of money. Why? Because the price is clearly in an uptrend. So in an uptrend, you are not looking to sell, you are only looking to buy. So where do you buy? You wait for the price to come to this middle line for you to place your buy trade. That is how it works. So during a strong uptrend or downtrend, price can remain in overbought condition for a very long time, and during downtrend, price can remain in oversold condition for a very long time. So it is advisable that you understand the rules guiding this indicator so that you'll be able to trade it profitably. So whenever you are trading this indicator, please make use of support and resistance level. Don't forget that, like I say, price action still remain the number one in forex trading. So you need to implement price action in this indicator for you to have a better entry and exit strategy, right? Now this is another example of the Keltner channel, right? You can see clearly that formerly the price was in a range, and suddenly the price break below the range and a downtrend begins. Now for the fact that the downtrend has begun, you can see that the price has been crossing the lower band consistently, right? If you watch clearly, you see that the price has been crossing the lower band consistently, and if you decide to buy at the lower band, you will get hurt because your stop loss will be triggered so many times. So that is why I said you have to wait for the price to get to the middle line for you to place your sell trade. And when the price crosses the middle line, it means the trend have changed direction, right? When the price crosses the middle line, it means the trend have changed direction and a new trend has begun. So what are you expected to do? You are expected to ride the new trend, right? So if you watch clearly, you see that the price was formerly in a range, and suddenly this long red candle broke the support level and the price started heading down. That means downtrend begin. So as the downtrend begins, the price was touching the lower band consistently telling you that the price is in a strong downtrend. So if you understand this channel very well, you will be able to place your sell trade whenever the price gets to the middle line, right? So where do you take your profit? You will take your profit when the price crosses above the middle line during a downtrend. When price crosses above the middle line during a downtrend, it means buyers have stepped in and they are going to push the price upper. And if the price was in an uptrend and then crosses below the middle line, it means the sellers have stepped into the market and they are going to push the price lower. So that is why you are always advised to trade in the direction of the trend. Don't ever trade against the trend because you get hurt. So this is how simple the Keltner channel looks like. Then another thing you need to understand about the Keltner channel, if you truly want to make more money using this indicator, you need to understand when market is in an uptrend and when the market is in a downtrend. Because like I said, if the market is in a range, you can trade the upper and the lower band, which now acts as a support and resistance level, or which acts as overbought and oversold condition if the market is in a strong range. But if the market is in either uptrend or downtrend, then you should change your strategy, right? You should only look to buy if the price is in uptrend, and you should only look to sell if the market is in a downtrend. Then the most powerful thing you need to do for you to ride a trend very well is to plot out your 200 moving average, right? Now your 200 moving average will tell you the direction of the main trend. If the price is above the 200 moving average, it means that the trend is going up. And if the price is below the 200 moving average, it means that the price is going down. So you are meant to trade in the direction of the trend. So if you watch this chart clearly, this is the 200 moving average and this is the line, this black line is the 200 moving average, right? So when the price is above the 200 moving average, it means the price is in an uptrend and you are only looking to buy, right? So if you look clearly, you see that this is the 200 moving average. This black line you are seeing now is the 200 moving average, right? And you can see that the price is above the 200 moving average, which means that the price is in an uptrend. So you are only looking to buy, right? So where do you buy? You buy when the price touches the middle line. That is where you are expected to buy. So please, in an uptrend, do not sell at the upper band. Do not sell at the upper band during an uptrend, and in a downtrend, do not buy at the lower band, right? Because your stop loss will be triggered and you will lose your money. So like I said, whenever the price is above the 200 moving average, you only look to buy. And whenever the price is below the 200 moving average, you are only looking to sell. And like I said, you only buy when the price comes to the middle line. That is the 20 EMA. That is where you are expected to place your buy trade and then ride the trend. So where do you take your profit? You take your profit whenever the price crosses below the middle line, which tells you that the uptrend is about to end and the new downtrend is about to begin. So this is how you trade using the Keltner channel. Then if you want to know that the price is in a range, you also plot out your 200 moving average, and if the price is crossing the 200 moving average consistently, it means that the market is clearly in a range, right? And that is where you can make use of the lower and the upper band. Now if you watch clearly, you will see that the price is crossing the 200 moving average consistently. If you watch clearly, you see that the price is crossing the 200 moving average consistently, telling you that the price is clearly in a range. So you are only looking at the upper band and the lower band. If the price gets to the upper band, you are expected to sell, and if the price gets to the lower band, you are expected to buy, because you can confirm that the price is in a range As you can see, the price is in a range, and you are meant to buy at the lower band and sell at the upper band. So make sure that you implement this strategy in a demo account, backtest it very well, and make sure that this strategy works for you before you can use it in a live market. So like I said, if you want to identify trend and range, like you want to know the uptrend, downtrend, and range, you can simply plot the 200 moving average. That is how you will be able to identify an uptrend and a downtrend, and also a range. So if the price is above the 200 moving average, it means the price is going up, is in uptrend. And if the price is below the 200 moving average, it means the price is going down, which tells you that downtrend is in progress. But what happens if the price is crossing the 200 moving average consistently? It means the price is in a range, right? So you are meant to trade the upper and the lower band. But if the price is in an uptrend, you only trade in the direction of the trend, which is up. And if the price is in a downtrend, you trade in the direction of the trend, which is down. It is only during a ranging market that you can trade the upper and the lower band, because in a ranging market, both the buyers and the sellers are in equilibrium. They are exchanging prices. So that is why I always encourage you to implement your support and resistance level whenever you are making use of the Keltner channel. Don't trade this indicator alone, because sometimes you might get wrong signal. So you have to trade it alongside with price action, which is support and resistance level, so that you get a better result from this strategy. Then there is another thing you need to understand about the Keltner channel. There is what we call the Keltner channel squeeze, right? The Keltner channel squeeze is when the candlestick start getting smaller, right? When the candlestick start getting smaller in a tight consolidation, it means the price is in a squeeze, right? And what happens when price is in a squeeze? It can break out, right? And the movement is so long. So this is where you catch the greatest move in a market. So whenever you open your chart, plot out your Keltner channel, right? And then you see that the candlesticks are getting smaller, forming a tight range, a tight consolidation, right? It means that a breakout is about to occur, right? And you should watch those breakouts so that you can be able to benefit from the breakout. Now if you watch clearly, you will see that formerly the price was in a downtrend, right? You can see these long red candlesticks, yes? So you can see that the price is in a downtrend, right? Then suddenly when the price got to this level, it went up here, came back, and couldn't go below. So this place now becomes your support level. You can use your horizontal line and map this place as your support level, right? Now what happened? The price now started getting thinner. For the fact that this is a support level and this is a resistance level, and the price start getting smaller, right? In a tight consolidation, started to squeeze, it means that a breakout is about to occur, either in the upper side or in the lower side. So when you discover this tight movement, what you will do is you simply plot your pending order, your buy pending order above here and your sell pending order below here. Then you are waiting for a breakout, because some breakout is so strong that you won't even have any chance to place trade, right? That is why in this scenario you can make use of the pending order. You can place a pending buy order here and place a pending sell order here, right? And watch to see what will happen next. Now if you watch, you can see that the price now broke above the resistance level, right? And then start to rally up. You can see the long move, right? So at it being you place your pending buy order here, right, and your pending sell order here, what will happen is the price will break out and trigger your entry, and then you'll be able to ride this massive trend. And when the price triggers your entry, don't waste time, just delete the sell and then ride your trend, right? So this is how you trade the Keltner channel. This is how you trade it. It's very simple. So this is another example again. You can see the squeeze Formerly, the price was having this long candlestick, then suddenly it begins to bring out smaller candlestick, which tells you that the price is in a tight consolidation, or you can call it the Keltner channel squeeze. So look at how small the candlesticks are. Look at how small the candlesticks are. And if you watch clearly, you can see that the price is in an uptrend, right? If you watch clearly, you see that the price is in an uptrend. So you are only meant to trade in the direction of the trend, right? So if had it been you are trading in the direction of the trend, you'll be able to gain from this powerful move. Imagine the kind of money you will make from this powerful move. So that is why it is always advisable to trade in the direction of the trend. Don't ever trade against the trend, because it is not advisable. If you watch this example again, you can see that the price is clearly in a downtrend, right? Touching the lower band consistently. So what you are going to do here, you are expected to follow the trend. And where are you expected to place your sell trade? When the price comes to the middle line, you place your sell trade, right? Or you can still use a candlestick pattern. Okay, you can use the candlestick pattern so that you get a better confirmation before you place your trade. And then the price now went above the middle line and later ended up in a wick, forming shooting star candlestick pattern. Right now you have seen the shooting star telling you that the sellers are still active in the market. So when the shooting star appears, it gives you a powerful confidence or confidence that the price is heading down. So you place your sell trade at the close of this candlestick and put your stop loss above the middle line, and then you can be able to ride this trend, right? So where do you take your profit? You take your profit when the price crosses above the middle line. It now tells you that the price have changed direction, or the trend have changed direction. So that is where you are expected to take your profit. But if the price did not cross above this middle line, you can still hold on to your trade and ride the trend. That is where the risk reward ratio comes in, because if you are risking 1% to make 20%, 30%, or 40%, you are making money. So with this strategy, I believe you'll be able to make money consistently from the forex market. So my advice to you guys is to go and backtest this strategy on your demo account, right? Backtest it very well, and if the strategy works very well for you, you can then implement it on your live chart. Now let me show you how you can plot this indicator in a live chart. So this is a live chart, right? This is Euro USD. This is a live chart. So for you to plot this indicator, you simply go to the indicator and search for Keltner, right? This is it, and you click it. It's now out. So this is how it looks like in a chart. This is trading view. So this is how the Keltner channel looks like. It's similar to a Bollinger Band. This is the upper band, this is the lower band, and this is the mean. Now let's go to the setting for you to see that the setting is default. We are using the default setting, right? Then this is the upper, this is the lower. So you can see that we are using the default setting, right? You can see the 20 moving average, exponential moving average. You can also see the 2 average true range. So you can see clearly that we are using the default setting of the Keltner channel. So that is what you expect to use. So if you look clearly, you understand what I'm talking about. Here you can see that the price is in a strong downtrend. That is why the price is touching the lower band consistently. If you watch, you see that the price is touching the lower band consistently. So where do you place your trade? Whenever the price makes a pullback to the middle line, you place your sell trade. So you can see how simple this strategy is, right? So if the price is in a range, you can make use of the upper band and the lower band. But if it's in an uptrend, you trade only in the direction of the up, and if it's a downtrend, you trade in the direction of the down. So that is how simple this strategy looks like. So ladies and gentlemen, we have come to the end of today's video. I hope you have learned one or two from this Keltner channel. My advice for you guys is to go to your demo account, backtest this strategy very well, and if you make more profit from the strategy, it means that the strategy is working for you. Then you can now implement it in a live market. I hope you love this video. If you do, give us a thumbs up. Don't forget to subscribe to this channel for more educative content like this, and also don't forget to turn on your notification icon to be the first to be notified whenever I publish new content. And also don't forget to share this video on your social media handle. I still remain my humble self, Austin Ikeru, and you all are welcome to my channel, Ostino FS. I will see you again in my next update. Bye.